Hi everyone, my name is Aaron. Welcome to Real Fi Talk. On this channel, we talk about the ups and downs of financial independence, how to achieve it, and how to sustain it. If you like this type of content, please like and subscribe below and leave a comment. I'll read and respond to all of them. Also, click the little bell so you get the most updated content. So in today's episode, we're going to do something a little different. We're going to review an article that I found online around savings. So what we'll do is I'll share with you in just a minute the article, and I'm going to read through it with you, and let's draw some conclusions together. Okay, let's jump in. Okay, so this is an article from Investopedia, and I think it was just published a few days ago. And the article is titled, "How Many Americans aged 45 to 54 Have Any Retirement Savings at All?" And this article is pretty interesting. You would think between 45 and 54 that close to, I don't know, maybe 80% of Americans might have something, but it's actually not that high. And we'll get into that in a little bit. Now, the article starts off kind of setting the context here. And this article actually is part of a series. And so they look at these 10-year time horizons for different age groups. And the 45 to 54 I thought would be most interesting because for a lot of people who are thinking about early retirement, this is when it starts to get real. So on one hand, people 45 to 54 are probably making some of the most money they've ever made. But on the other hand, they're also facing some of the largest financial demands they've ever had. So whether it's paying for college or supporting aging parents, folks from this 45 to 54 range have a lot to be thinking about. They're also probably pretty far along in paying off mortgages. Maybe they have car payments. There's a lot of different expenses that are involved at this level. So retirement savings here is going to also be a big priority for a lot of people, but you're going to see below, there's still a large percentage of folks who don't have anything saved. So the Fed survey shows that 62% of households led by people in this age range had money in a retirement-specific account in 2022. That's the highest participation rate, I believe, since 2007, according to the article. But you can kind of see how this breaks out here. So this is a kind of a bar chart showing the percentage of Americans with any retirement savings at all. So 18 to 34, less than 50% have any retirement savings at all. 61.5% of people 35 to 44 have some retirement savings. 62.2% who are between 45 and 54. And then it actually goes down 57%, 51%, and down to 42% by age 75. And I'm assuming by age 75, it's down into the 40s because at that point, you probably are spending your retirement. So again, nowhere close to what I thought it might be, maybe 70, 80% for 45 to 54-year-olds, only 62.2%. Okay, so then the article gets into how much actual money they have in these retirement accounts. And this is as of 2022, and obviously we've had some really booming markets in the last 4 years, maybe with the exception of the last month or two. But the median balance was $115,000 in 2022. And that figure is well above the balances reported by those 45, reflecting kind of the longer time in the workforce, more years to accumulate. And you can kind of see the breakout here. And it's a pretty big range. So folks 18 to 34 only have $18,880 in their retirement savings accounts. And you can see from 55 to 64, it looks to be 185,000. 45 to 54 is 115. And you can see hitting the peak 65 to 74 and at 200,000. And I'm guessing that's just the laws of kind of compounding interest and inflation that's contributing to that higher number there. And then again, you can see it kind of tail off at 75 plus, 130,000, because you actually are probably spending it at that point when you're well into your 70s and beyond. So I don't know, when I first saw this number, I thought it would actually be higher, 45 to 54. And if you start thinking about, well, if you take out Social Security and you're trying to live off of your retirement savings, um, 4% of 115 is not a big number. I think, what is that, around maybe 5,000 or less a year? And then at 65 to 74, assuming that you're doing traditional retirement, $200,000 being median, the halfway point, that's only $8,000 a year coming in for living expenses if you're trying to live off the 4% rule. So not a big number there. I think it's also important here to look at the data. So I think one of the issues that we're seeing here is this data looks at the median and not the mean, right? So the median is going to be the midpoint of all reported balances. Half of the households have saved and half have had less. So medians are used here instead of means to kind of reduce the influence of unusually high or low balances. So this article also offers some tips on how to do some catch up. And I think it's kind of insinuated here that Americans should be saving more, especially in their mid 40s into their early 50s. So a couple of the concepts here: use catch-up contributions when you're eligible. Yes, once you turn 50, you can make additional contributions to things like 401k. So that's a good thing. It says government 457s, thrift savings plans, $1,100 a year for IRAs. Reduce debt to free up cash flow, easier said than done. Paying down high interest debt, such as credit cards. Okay, I think if you're thinking about retirement savings, I'm guessing you're already doing this between 45 and 54, but I guess a good point. I'm not quite sure how helpful this is. It just says avoid big mistakes. With less time to recover from setbacks, missteps can be costly. Panic selling during market downturns. Yes, don't do that. What else? Financially supporting adult children at the expense of your own security. That is a big one, right? So people 45 to 54, they're not just taking care of elderly parents. They might also have adult age children who are trying to launch into life and establish themselves, their own autonomy, and you might be having to support them. And I think creating some boundaries around what that support looks like is very important. So that's the article I wanted to share with you today. Let me know if you think this format is interesting. My overall thoughts here, just to summarize: 62% of folks having any form of savings was a low number. I thought it would be closer to 80% for those 45 to 54. And I think the number, 118,000 total amount saved for 45 to 64-year-olds. I would say that's a surprisingly lower number than I would expect. That really means that as a American society, we really need to focus on saving probably much earlier. And if we're able to save much earlier, just the impact of that, the compounding time impact of gains of just keeping money in the stock market is probably going to help us in the long term. So that's it for today. Again, this is just something a little bit experimental. I want to share this article with you and get your feedback. So if you like this content, or even if you didn't like it, leave a comment below. Love to hear from you. What are your thoughts? Were you shocked by this? Is this what you expected in terms of retirement savings rates? Thanks.